It is Saturday morning. I am your host, the Cowboy. This is Elliott Wave Cafe and time for Bitcoin and Ethereum Elliott Wave analysis. Let's get started, guys. All right, so we have lots to talk about. I'm going to start with a few charts that are a little bit macro related here. We're going to compare Bitcoin here with NASDAQ. We're going to take a look a little bit at the VIX and the relationship also between Bitcoin and the US dollar. And then we'll jump over and take a look at our regular counts on Bitcoin, longer time frames, smaller time frames, see what the charts are telling us. Well, just starting with Bitcoin versus NASDAQ, and here, as you pretty much well know by now, these are extremely correlated, especially lately. And Bitcoin, it seems to be more and more perceived as a risk asset out there. And it's pretty clear here that every time we have rallies into the stock market, rallies into the technology sector, rallies into the NASDAQ, Bitcoin benefits as well. So who's leading who still remains to be seen, but the correlation here, it's pretty tight. And especially here lately, if you look at the smaller time frame, I mean, they're trading almost tick for tick. So the big question is, what's going on in this macro environment? And will Bitcoin suffer in case we're going to get a meltdown in the stock markets, in NASDAQ, S&P 500, Dow Jones, across equities, which have been acting pretty weak here lately. So on Friday, we had a pretty big sell-off in NASDAQ, you can see in here. Bitcoin did not follow through. And we kind of stopped at about 39,600 or somewhere around those levels. And as I'm recording this, Bitcoin is still pretty much stable. Now, it remains to be seen what's going to happen on Sunday night when we open the futures. And we're going to get a little bit more liquidity in the markets. I know there's going to be a big election, I think tomorrow in France. So depending on those results, if we have a surprise, the markets could actually, move lower. And by surprise, I mean Le Pen, winning the French election and take over Macron. So that's I think the downside surprise on the market. So it remains to be seen. We might, find out on Sunday night, on Monday, that these markets are actually pushing lower, because all the markets need, it's a little bit of a risk off. She will be perceived similar how it was in the Trump election. I don't want to get into the politics here, but it's probably going to be perceived by the markets as a negative, maybe at least in the beginning, and then we'll see what happens from there. But anyway, I think that's the risk event of the weekend. And then obviously we ran out of time on Friday, and the markets kind of stopped exactly they stopped at the lows, and it had a pretty bearish close. So what this could indicate is that Bitcoin, possibly on Sunday, or the following week, if these markets continue to press to the downside, that we will have a follow through in Bitcoin as well, and we could start to begin a descending leg here in Bitcoin. Now, that does not have to be the case. This could be just an inverted head and shoulder in the NASDAQ. This could be just a 5-wave decline in here, and you can still, get a little bit of a rally up if that's going to be a B wave or let's say a wave 2. We can get a subsequent rally in both the NASDAQ and the Bitcoin, and then a sell-off later. How can you look at this as a wave C? It's kind of hard at the moment because the decline in NASDAQ seems to be in 5 waves. And if you're counting this as a wave 1 and then push back in a second wave, it's pretty inaccurate. So, to just kind of tell you the truth, shorter term here, it seems that the markets would want to break lower, but so far, as long as, especially in Bitcoin, we're holding, let's say 37.5, and I'll get into those details a little bit later here, as long as you're holding this 37.5 level, I think that there's still a chance that Bitcoin could continue to recover. So, it's important, this relationship. I think it's something that we continue to watch. Bitcoin does not trade in a vacuum. It's extremely correlated now. And, we just have to watch what happens on risk. We have, at the beginning of May, we have the next Federal Reserve meeting in here where they're expected to raise about 50 basis points. As you know, Powell, it's pretty hawkish, and he expects that they will raise rates for the remaining of the year. I don't know exactly what their target rate is, where they're going to think they're going to go to a neutral state, maybe 2%, maybe 2.5, depending how much rate hikes this market will able to swallow and endure before things really start to fall apart. But the NASDAQ pattern here does not look very convincing, especially that we had a big failure up here at about 52,000. So no, that's Bitcoin, I'm sorry. I think it was at about let's see here, about 12,000. Yep. So let's continue to kind of watch this relationship. I just want to kind of start with that in terms of where we are in the risk sentiment. Then I'm going to move over to the next one in here, which is a relationship between the VIX and Bitcoin. So VIX is the fear index. If you're not familiar, you know, it's a very strong indicator kind of what happens regarding the fear gauge into the market, and every time you know, you have VIX kind of spiking, people are buying a lot of puts, they're expecting the market to continue to crash lower. This is an indicator of you know, what's going on in the option market, and how much fear there is actually out there. And every time, you know, VIX spikes, you know, you have these big sell-offs into the market, and I'm been starting to kind of watch the correlation here between VIX and Bitcoin. You have VIX up at the top, and then you have Bitcoin at the bottom. And I was trying to identify the points where you've had, you know, pretty massive, I mean, not massive, but pretty strong rise into the VIX price. And, you know, kind of extrapolate that to the Bitcoin price. So if you can see in here, if you could look at the blue lines, and, you know, we can start from the right going to the left, and I think this correlation gets stronger and stronger now. And it's, as it uses as a strong, you know, fear index, every time you have, you know, big spikes into the VIX, you know, into some sort of a resistance level, you will see that Bitcoin has a tendency to kind of bottom along with the markets, right? These are levels where the volatility sellers will come in. They would expect that the market is getting ahead of itself in terms of fear, and they will sell volatility. They will sell VIX in here, and they will expect that this returns back towards normal levels. So VIX is not a trending, you know, issue. It's more of a cycle, and it bounces between certain levels where, you know, at low levels you have, you know, more of a positive market that's trending. People are comfortable. They're getting maybe too comfortable sometimes, and then you get these spikes. But then when you also get a move into the opposite direction, you know, these things are kind of overblown, out of proportion, and there is a revert to the mean in here. So Bitcoin tends to rally when you have this extreme levels into the VIX as well. So you can look at the blue lines, and then every once in a while you're getting, you know, moves up into the VIX where Bitcoin maybe rallies a little bit, does not really respond. Maybe there's something else there that pushes the price of Bitcoin down. Whatever news affects just Bitcoin independently does not really react, and then it moves lower. But these are kind of far and few between. You can look at this spike in here. Bitcoin finished up the correction back in there. You can look at this spike. So this was, you know, not as large, but you know, it was still something that was worth considering. And then Bitcoin found a low, and then you had another one here where you had the big sell-off originally in Bitcoin, you know, when China banned it, and they moved all the miners and all that, and then this kind of continued to push lower, right? So it's not a perfect indicator, but it's something that definitely needs to be watched, because I think it can provide a little bit of value into when you know, you kind of start to pay attention. How high is VIX? Let's say if it's towards 35, you're getting back to big resistance levels. You watch Bitcoin prices, and you can start to tell that, you know, there could be a rally coming, there could be a relief, and then prices could move higher. So pay attention to VIX versus Bitcoin. I think it's an important thing. Okay, the next one that I have on here, it's Bitcoin versus the dollar, which is something that I wanted to kind of take a look at. As I've been watching it, the correlation, you know, it's not very strong, or the inverse correlation. Although you can say that in periods of dollar strength, Bitcoin is not performing very well. Now, there are periods in here where, you know, the dollar rises and Bitcoin rises as well. You can see, you know, you know, these things kind of happen, right? You have, for example, even here, you have the dollar index pushing higher, Bitcoin pushing higher as well. So there are bits and pieces into this correlation where they will kind of trend together. But let's say, if you want to look at an average, most of the time you will see in here that, they're mostly spending the time below the zero line, which means there is an inverse correlation. And these kind of purple shaded areas in here, what they're supposed to show, it's the periods of the dollar strength. So you start back in here, let's say middle of 2014, you're pushing back towards the end of 2017, huge period of dollar strength in here. And as the dollar was moving higher, you see Bitcoin, did not really do a whole lot, actually sold off, and then it kind of struggled to rally. And then the moment the dollar found the top, Bitcoin actually started to accelerate, and you had a big sell-off into the US dollar. Bitcoin started to accelerate higher. Then the dollar found a low in here, and it started to gain some more strength, and Bitcoin did not do much, right? You had the big sell-off in 2000. This was in, what was this, in 2019, 2018, at the end of that big sell-off towards 3K in Bitcoin. And dollar was climbing in here, and it was just kind of pushing and pushing, and Bitcoin did not perform really, really well. And then, obviously you had the big dollar spike, the pandemic, in March 2020, and then Bitcoin found a low in here. And then as the dollar was selling off, as the Federal Reserve, and you had fiscal and monetary policy throwing money at the market, the dollar collapsed in here, and Bitcoin started to rally again. Now the dollar found a low, started to advance, and then Bitcoin stopped going higher. So the correlation, I think, is pretty strong. It's not perfect, but it does show you kind of what's going on in here. And the dollar, it's been very, very strong lately. It's threatening to move above 100, already did, but it's coming into a big, big resistance area. So keep an eye on the dollar here. If we're going to get a big breakout to the upside above these levels, right, and maybe a meltdown in the stock market, that you can expect the Bitcoin to continue to sell off. If something happens and, the Fed doesn't get too aggressive, if the inflation is coming back down, if you have some sort of a relief in the data, then the dollar could probably start to slow down in here, found, this resistance level as being important, and then continue to push, and then reverse lower, right? Create maybe a little bit of a down leg, and then that could benefit Bitcoin and risk assets, emerging markets, so on and so forth. But for right now, it is pushing higher, and it's quite aggressive. So, I just kind of wanted to do a little bit of an introduction here, 10, 12 minutes, talk a little bit about macro, kind of where we are in the overall picture, create a top-down view and where we are in risk. And now I wanted to kind of dive down and start to take a look at the counts. So, looking at this extremely bullish count, based on kind of what I've just said so far, it looks like it's going to be very hard for this count to survive with this wave 2 low and a wave C being on January 24th. I think it's still an important low. It hasn't been challenged yet. It's just the fear that's out there that this is going to collapse lower, and actually it hasn't happened yet. But what also has not happened is the fact that you are not rallying higher as expected after an ABC flat pullback. So if this is an ABC in 335, you're expecting this market to start trending higher. And the rise of these lows is very anemic. It's very concerning. Doesn't look impulsive. So it's got all the signs of not wanting to follow through into this count. Now, markets climb a wall of worry. There is fears. There is all kind of other things that could trigger still a rally to the upside. It doesn't necessarily have to start super impulsive. You can get a leading diagonal, you can get a 1-2, 1-2. I'll show you in a second, but that approach, it's starting to sound less and less likely. So, I do still believe in this count. My level of confidence has been slowing, has been declining due to the fact that I'm not seeing a rally, but I will continue to respect it until these lows here get taken out at about, 30,000, I think it was 30 or 35 or something. I'm sorry, I'm not remembering exactly the number what this low was, but if those lows are getting taken out, then I don't think this count will survive, because I'm not going to have a way to count it. Still, as a flat correction, it's going to get pretty much technically damaged for me to be able to sustain that approach. So, we'll continue to kind of watch this. It remains one of my primary counts in here, and, we'll continue to kind of watch for further evidence in here. Now, the next one that I have in here is our triangle interpretation, which is the secondary count that I have, which looks pretty decent still, where you're looking at the 1, 2, 3 triangle in 4. I don't like this D wave. Maybe it's just not complete yet. I'll show you here in a second when we go to smaller time frames. I would have liked for this to go all the way back here towards the 618 at about 56,000. It hasn't happened. We traded it from the long side and we were able to kind of get some profits, but not as high as we would have liked them to be. Now, could you say that the wave D terminated there? Remains to be seen, and then you could be in an E wave right now. So this still remains, fairly valid. Again, it will get invalidated the moment you break below this A wave lows up there at about 30,000. So still an important count. Still continues to look fairly decent. You're approaching the 1618 time fib compared with the distance travel in the wave 2, so we're coming slowly towards the end of this consolidation in here, I think. So something to definitely watch, and then this will lead over to a fifth wave to the upside. So both counts, right, the one that I just showed you previously, the white count and the red count, call for a move to the upside in here, with the triangle here working a little bit more in a favor of a consolidation, and the fact that this move in here is still pretty choppy, so it could be considered a D wave in there. So the next one that I have is the one that it's a little bit more bearish, and it is, my black count, and this is a competition with, one that is, I think it's a yellow count that I have. And what I'm placing basically a wave 1 cycle up here, and that would require, let's say, a much longer and drawn out correction in Bitcoin that can take several years, that has started back here, right? This one allows for this to be a 1-2-1-2 with a much shorter wave 2 in time and in decline, so you're not necessarily getting into a huge bear market, more of a liquidation sell-off in here that would call for a bottom of the second wave, maybe anywhere between, let's say, 15 to 20,000, between 15 and 25,000, right? That's where you have about a 38% retracement of this wave 2. And then the 618, it is about 11,000. I don't know what would trigger such a big sell-off, but I'm putting in there in terms of where we are. I mean, this is a log scale, and this sell-off in here, I don't think it's going to happen that low. I think a lot of people will step in when they're going to see, cheap prices coming in Bitcoin. But, you never know. The markets, can create an avalanche. Something can happen, in the credit markets, risk. People are just kind of getting flushed out of their position, and all of a sudden you get big spikes to the downside, and, hopefully the bids are big enough to pick up all of that. But this would be a scenario where you would basically decline right now in a wave A. In here, let's say that's an impulse down, and you go in a B and then a C wave down, or this is, an ABC for a W, you're going to get an X and then another ABC. So maybe instead of doing a simple zigzag, you're going to do a double zigzag in a second wave. But this allows for this decline to kind of terminate. Now, again, I've talked about this in some previous videos. I'm not too happy with this wave 1, from this low to this high, because you have, quite a mismatch, as this would be considered a fourth wave in here with anything that happens in a second. It's a big discrepancy there. If you take the second wave and put it back here, and you go in a 1, 2, 3, 4, 5, maybe that's more acceptable, but also this fourth wave compared with the second, again, they're just very, very misaligned. So this would be kind of one of the ways to, still consider that. Again, this somewhere up here, you have a wave 1 top. I would not place it back here, and I would not look at it as an A, B, C, because it just doesn't fit my proper right look for a flat correction. Let's say that you're looking 3, 3, and then 1, 2, 3, 4, 5. I think that's just kind of grossly misaligned with the wave guidelines and all that. So, but anyway, that would be the more bearish scenario, and we'll dive into kind of how this will unfold here in a second. Okay, so going back to the triangle, I wanted to kind of show you on the smaller time frame, on a 1-day time frame, how this would look. And you are basically on the C wave terminated back here at about 34,000. Then you've done an ABC in here for a wave W. You came down in the next wave, close to this B wave low. This is supposed to hold for an X wave, and then you go back up higher here in an A, B, C, so you're still rallying higher, then you complete a D wave, and then you count down in this wave E. Now, you might ask me, hey, you know, just like I've touched on it before, is D wave maybe completed here and you're doing an E wave? It's possible. It's kind of unlikely. That means that D wave will go here. This would be an A wave decline. You're going to get a B and a C for an E, and then you're done, and then you push higher. Here is your 618 down below there, where, you know, we don't have a lot of time in terms of the time fib. I mean, it's not like this is going to dictate, you know, that the market will obviously finish there. It's just something that we're watching in time and kind of see how it relates overall with the price. But this is the look inside these legs in here, and we're taking trades based on this. So we're long here, you know, thinking under both bullish and the you know, this triangle scenario, that the move to the upside here, it's you know, it's something that we're watching and we wanted to trade, but we're very, very close to the stops right now, and you know, if something happens on Sunday night, we'll get tagged out of these positions, and then we'll just have to kind of reinitiate. But this is something that, you know, we were watching to see if we can take advantage of. The next one on the bullish scenario, right, in that primary count on that ABC, you know, you can look at this as a 1-2-1-2. It could be a little bit forced in here because you know, it does look highly corrective, but it's, you know, I've seen moves like this where you have a double failure in here of the downside, and then you're actually starting to rally much higher. So again, this count will get invalidated the moment you break below 37,500 at this wave 1 low, right? If that's a wave 1 of a lower degree, that means that you got to get out of the market before this happens. And if you look here on the smaller time frame, right, if you're looking at this decline in a second wave, which does look highly impulsive, so it's not that likely that it is, you know, then the little spike lower below that spike, you know, the stops are being placed, and this is a wave 1, a wave 2, and then you're looking for the 3, 4, 5 to create a wave 1. So we'll see what happens over the weekend, but, you know, I'm not necessarily holding my breath that this is going to work out. We still have it. We're going to hold on to it until these levels here at 37,555 get taken out. The next one, it is the bearish count. So this one, it's what I've showed you before under the black, and you know, diving down into the smaller time frames, you look at this as an impulsive decline in a wave 1. This is an A, B up in C. Right? You can do both. You can do a WXY if you want, or an A triangle B and up in C. And, you know, that tried to rally up into the 618 at about 52,000. It failed to do so. It just kind of falls short of that. Then you have an 1, 2, 3, 4, 5 impulse down in a wave 1, and you are in the middle of the wave 2, where, you know, if you want to place this wave 2 back here, that's fine. I think it's fairly short. That would mean a very aggressive market to the downside. So this could still kind of melt up a little bit in here for the next couple of days, maybe by Monday or something, maybe create a little bit of a rally, and then actually crash lower in that third of a third, because you have a 1, 2, 1, 2, and then do a 3, a 4, and a 5, a 4, and a 5, and this is how you get towards 20,000 by, you know, looking at this as a bearish flag followed by a much larger decline. So in terms of trading, if anyone is interested in trading Bitcoin from the short side, if you're taking a short position in here, your stops have to be above these levels at about 45, whatever this was, right there. That's because that's the origin of the wave 1. So you got to allow yourself enough room for the second wave to develop. You know, you might want to wait for a little bit of a pullback. You could build a short position if you want, right? Just say, I'm going to sell a little bit here, I'm going to sell a little bit higher. And then if I'm getting very close to these levels, and just kind of pass it, just so you know that's where you're wrong, and you got to get out of that short position, because a much larger squeeze higher can start to develop. I don't know what will trigger that. I don't have a crystal ball. I'm just watching price action and trying to make sense of you know, of the next likely moves. So we're coming to the half of the video here, guys, and I want to, you know, say thank you to everybody for being a part of this channel, for helping us grow. It's very important that you stick with us, and, you know, you subscribe and you like this channel, share it amongst your friends. You know, we can continue to kind of grow in the algorithms of YouTube, and things are looking decent. We're kind of growing at the normal pace, you know, so. Again, I just want to say thank you, and I appreciate you being here. So we'll just jump over and take a look at Ethereum next. So Ethereum, couple of counts, just like in Bitcoin, we have the triangle. You're very familiar if you've been in this channel for a while. If you're new, this is that triangle ABC. Now the proportion here between D wave and the C wave in here looks much better. In Bitcoin is a little shallower, but I would accept the D wave right in there, which means that we're doing maybe an E wave decline. Somewhere into the time fibs back in here, maybe extends a little bit more, and then you're going to push back up higher towards 8 to 10,000 to finish up a larger fifth wave of a larger third. So this is, a very standard, let's say, contracting barrier triangle. So this is when B wave goes above the origin of the wave A. And I want to remind you, there are also running barrier triangles where D wave gets close to the B wave top. That's just of a side note, and that's called a running barrier. So this is a contracting type where we're converging in these lines. We're coming toward an exhaustion point in the E wave, and that's where you start to get a massive break to the upside. And if it's a triangle, then you're going to get a pretty, nasty reversal after this fifth wave finishes up. But we're very, very early in this process, and I think there's still a bit more to go if this is the right development. Now, the super bullish one up here on the 1 week chart is my blue count, where I'm looking at this as a wave 1, wave 2, another wave 1 and 2 in here in this flat scenario. C versus A at about 100%. This move have been completed at the end of January, and the market is trying to create a bullish setup in a 1-2-1-2 that can actually scream Ethereum much higher out of here. And this is it's kind of longer term trending channel. Probably not perfect, but it is something that I'm definitely watching. The bearish one would be that you have a wave 1 top instead of the B wave, and the subdivisions in here are a little bit more ugly, but that would mean, just like in Bitcoin, that you're having a wave A decline up in B and then down in C for the second wave. So I don't want to repeat that. Just kind of, extrapolate what you're seeing here in Bitcoin price action, move it over to Ethereum, since they're, highly correlated, and it's probably going to follow kind of what's going on in Bitcoin. The Ethereum Bitcoin cross is pretty much, it's in favor of Ethereum, but it's been kind of sideways here for, I don't know, maybe for about half a year, if not more, where they're just kind of moving to the sidelines. So here is a look on the triangle count on the interior, just like in Bitcoin. You can look at WXY, or you can look as an A, triangle B, and up in C for the wave D. This came into the 100%, equality here between wave Y and wave W. So that's a pretty decent, nice move, and then we should be falling here into this E wave. This could also get pretty messy. It can be a triangle in its own, and it could just kind of grind lower and sideways a little bit higher, and continue to kind of just stress the heck out of traders for the next several months or several weeks until this thing kind of comes to a conclusion, and then you're eventually going to get a break to the upside in here. So that's the look of that larger triangle. And then on the bullish setup, if this was a wave 2 low back in January, right, the end of January there, this was an impulsive move in a wave 1. You're getting here a wave 2 with a failed C wave, then another 1, 2, 3, 4, 5 for a wave 1. A correction here in a second wave. I'm counting 1, 2, 3, 4, 5, 6, 7. 7 waves are corrective. It's not perfect. I'm not super happy. I do like that it stopped at 618 in a second wave compared with this wave 1. So that's a nice reaction. And then you're kind of making, higher lows, higher highs in here, but Ethereum needs to go. It needs to kind of start getting on its horse and starts to push higher and create a much larger advance. So that's the bullish count in here in a 1, 2, 1, 2. Where are you wrong in this one? You're wrong below these levels right there. Right? If the market starts to break that, and if you're starting to kind of see that it's going to break this trend line and starts to look kind of ugly in here, you can be obviously less confident. But until this big support here gets taken out, this could still pan out as being a bullish count with the move to the upside. So it's just a matter of how much bids are underneath this market, how much strength there is, right? In case of a sell-off, how many people really want to hold on to their Ethereum and Bitcoin positions, when it sells off? How many people are willing to let go and just say, I'm out of here, right? And those decisions are going to be made, at important swing points. So we'll see what happens in terms of macro. It's going to be, an interesting couple of weeks here with the Federal Reserve coming up, not next week, but I think it's the following. We're going to have inflation data coming after their meeting, so we're going to watch that. There's a lot of things, a lot of macro stuff that I think gets pushed also into the Bitcoin and the digital asset space. We had a pretty big webinar on, and we're doing this every single Thursday, in the morning there. So, last time I think we spent an hour and 15, an hour and 30 minutes. We ran through a lot of, kind of macro outlook, what's going on from the S&P 500, gold, oil, 10-year yields, inverted yield curve, things that can tell us, how we can extrapolate that to the digital assets and to the Bitcoin market. We're also taking a look at different stocks. I mean, you saw what happened in Netflix, and I'm trying to kind of put some videos out every day during the week from Monday to Thursday on the chart of the day. To kind of give you a perspective in kind of what's going on in there as well. So check those out too, because those are pretty interesting, and you can learn a lot of Elliott wave kind of by looking at that as well. But here we are, guys. Thanks again for being here, and don't forget to subscribe and like, and give us a thumbs up, leave a comment, let me know what you think. And what else would you like to see? And I'll see you in a couple of weeks for Bitcoin and Ethereum Elliott wave analysis, and if not, on Monday, back to the chart of the day, and we'll see what happens. Keep an eye on Sunday night futures. I think they're going to be interesting. Thanks for watching, and see you later. Bye-bye.